Of course, we know what has to be leveraged, but there's several impediments that prevents this from happening. Take us through what those impediments are.
Well, good evening. I think there are a number of impediments to getting climate change finance flowing, particularly in Africa, one of which is a lack of indigenous savings and investment in many African countries. Another is the fact that international private capital finds it hard often to invest, or if it does want to invest, it invests at a very high cost of capital. So one of the things we were doing today, we had a workshop with representatives from the investment community and government and NGOs and the UN to talk about new models that could provide finance to projects, environmental projects, and also projects that can enhance economic development as well. And there are a variety of models that might work to achieve that.
Mm-hmm. Now, of course, in many cases, climate change is, while it's not a new issue, it's still something that many businesses are coming to terms with. To what extent, in your view, are businesses on the continent, and particularly in East Africa, factoring climate change into the way in which they look at the economic and business environment?
Well, I think generally speaking, that process of understanding the issues, looking at the opportunities, is just beginning. And it's being sped up and encouraged by national governments and local governments taking a very proactive leadership positions on the issue. The Kenyan government, for example, is doing great things, publishing a climate change strategy, building awareness. But also, the economics of a lot of these investments make sense without subsidy or without regulation. So if you're looking to, say, replace costly diesel power generation with solar panels, that could be economic without those subsidies, without those mechanisms. Similarly, energy efficiency, resource efficiency, a lot of those things make a lot of economic sense without government intervention, and businesses are starting to see those opportunities and make those investments. But the key thing, one of the key things is access to finance, access to capital. The other is as you were saying, awareness and information, and that's starting to build.
Now, of course, finance is always a big deal in a place like Africa, and accessing capital markets in particular. What is the kind of banking environment like in terms of climate change? How open is the financial sector in terms of developing financial products for companies to deal with this challenge?
Well, again, I think that's it's a nascent area. Some banks are taking a leadership position on these issues. But generally speaking, most financial institutions are just starting to understand renewable energy and carbon markets and energy efficiency and all of these things, but are starting to think about how to develop products for investors, for businesses as well.
Mm-hmm. Now, talk to me about the risks involved here, because obviously this is an area that is always difficult to predict. What are the kind of risks that need to be mitigated here?
Well, I think one of the biggest risks, and the thing that we spend the most time worrying about, is political risk and policy risk. The fact that governments, if they've agreed to pay for an onshore wind turbine or a solar plant or whatever it might be, that they might renege on their contract or change policy after you've made an investment decision. Mm-hmm. And so that's a big concern. But one of the ways of addressing that challenge is to work closely with governments, build up a mutual understanding. And of course, all of these investments, these opportunities are creating growth, creating jobs, helping to deliver energy security, helping to reduce fossil fuel imports. So there's a sort of, it's completely in government self-interest to ensure that these investments take place.
Mm-hmm. Now, of course, you mentioned the question of self-interest for governments. When you evaluate the extent to which policy is being developed, particularly in the East African region, is there a sense that there's policy consistency when it comes to climate change and to, in fact, honouring those obligations? What is your evaluation of the kind of policy environment in which companies will have to work?
Well, so I think African governments, particularly in East Africa, have been taking a very strong leadership position on this. They have upheld their part of the bargain in terms of the international negotiations and the deal with developed countries to provide climate finance. They've put together plans, strategies, policies, are starting to put their own money into this. And so it's really important that developed countries in particular meet their commitments and their pledges that they've made at successive climate change conferences and negotiations, one of which is coming up next month in Doha.